just thought that well.
Yeah.
Well, it says it.
I know.
Mark that too.
Why don't we page equal to, right. Yeah.
Yeah. You might just think about it. We've had it in there for a while. It's just like, I want to make sure if we want to do something we need to be doing, we're doing it.
Well, we're doing it on your record, so we find it.
Right.
We're doing
Right.
it on your record. So I don't think, but particularly investment policy, must be doing it or strike it.
Or clarify that, you know, it's either with us or with you. Something like that.
Yeah.
All right. Thank you, guys. Sorry to interrupt.
Good morning, everyone. Not to rush things, but we'll go ahead and call the meeting to order. Item number 2 on our agenda this morning is to approve the minutes of the meeting of September 13th, 2018. I have a motion and a second on item 2. All in favor? Aye. All opposed? Motion carries. Item 3 is the consent docket. We have one item. I have a motion and a second on item 3. All in favor? Aye. All opposed? Motion carries. Item 4 is to ratify approvals. Item 4A is the payroll for the month of September 2018. I have a motion and a second on item 4A. All in favor? Aye. All opposed? Motion carries. Item 4B is consent to extend the final closing of the Singular Gulf Distressed Real Estate Opportunities Fund and its parallel companies. I trust everyone's had a chance to review the letter that I signed last month. Does anybody have any questions? Hearing none, I'll entertain a motion on 4B. Motion a second on item 4B. All in favor? All opposed? Motion carries. Item 5 is to approve the claims docket. I have a motion and a second on item 5. All in favor? All opposed? Motion carries. Item 6 is to approve the following applications for service retirement. We have 6 applications. I have a motion and a second on item 6. All in favor? Aye. All opposed? Motion carries. Item 7 is to receive the report of death and approve continuation of the pension to the spouse. We have one case. Motion and a second on item 7. All in favor? Aye. All opposed? Motion carries. Item 8 is to receive the report of death, authorize payment of the $5,000 death benefit, and authorize the Secretary to make necessary changes to conform on the following 2 cases. Second. Motion and a second on item 8. All in favor? Aye. All opposed? Motion carries. Item 9 is to receive the report of death, authorize Secretary to make necessary changes to conform on the following 1 case. Second. I have a motion and a second on item 9. All in favor? Aye. All opposed? Motion carries. Item 10 is to approve the request of the following to terminate vested rights and commence drawing retirement benefits. We have 2 cases. Second. I have a motion and a second on item 10. All in favor? Aye. All opposed? Motion carries. Item 11 is to approve the following application of vested rights, 2 applications. I have a motion, a second on item 11. All in favor? All opposed? Motion carries. Item 12 is items for individual consideration. Item 12A is the amended statement of investment policy objectives and guidelines. We were provided a copy in our packet, and there's additional copies that have been distributed. Renee, after looking at this, I think the only change is the one found on, if I'm correct, is found on page 14. Is that correct?
That is correct.
Okay, with regard to the K2 Monarchia Fund.
Yes.
Yeah.
So the only change to this document is on page 14. It's related to the liquidity provisions for the equity long-short portfolio. This is incorporating what Jason went over at the last meeting, talking about, incorporating or adding liquidity guidelines to the investment policy statement. So we took that chart and literally copied and pasted it in here so that you have it within your guidelines. And just as a refresher, what it's saying is that at least 20% of the portfolio will have quarterly liquidity, 60% of the portfolio will have annual liquidity, and 80% of the portfolio will have 2 years, at least 2 years liquidity, and that there's a maximum of 15% that the portfolio could be invested in funds with liquidity lockup greater than 2 years. And so, as you might recall, there's one investment currently on the K2 Monarchia platform at Sevion that has a 3-year lockup, and it's likely that we will propose, an investment in that strategy in January, but we wanted to incorporate liquidity guidelines that outline what the liquidity parameters are that you're allowed to invest in and what type of underlying funds that you can have.
So you're saying that we're likely to recommend dropping that investment?
No, adding an investment.
Adding, okay.
Adding an investment.
Okay.
But at this point in time, it's just incorporating liquidity guidelines into the investment policy statement. And then there's a few other minor changes that a couple people raised, off the record today, that we'll just take a look at this investment policy statement, and in the future may have some cleanup and some additional changes, just kind of do a good clean review of the document, see if there's any other changes. But today, for this purposes, it's just on page 14.
Any other questions for Patty? Hearing none, entertain a motion on item 12. Motion a second on item 12. All in favor? Aye. All opposed? Motion carries. Item 13 is the investment consultant report. Patty, you're up.
Good morning, everyone. So everybody should have a copy of the September ASAP report. We'll go through that, but just wanted to kind of give a quick update on more recent markets. As I'm sure you guys have all heard or read by now, the Dow Jones dropped 800 points yesterday. That equated to about a 3% decline. Really, that was on concerns regarding inflation and rising interest rates. Month to date, markets are down. But it's important to remember that corrections like these are healthy. Valuations were at all-time high. When you look at the month-to-date results, through the close of yesterday, the S&P 500 is down just a little bit more than 4%. The Dow Jones is down 3.2%. International stocks are down around 4%, and small caps have taken the brunt. They're down 7% month-to-date. But overall, the fundamentals of the economy still remain strong. Unemployment is at its lowest level since the 1960s. Corporate profits continue to remain strong. Most of this correction, a lot of it was within the technology and communication sectors. So some of the big names like Amazon, Facebook, Amazon was up more than 50% this year alone. So some of these technology names were hit pretty hard yesterday and for the first couple days of the month. But fundamentally, nothing has changed. It's been since the first quarter of this year since we've seen a correction. Volatility has been low since that time, and so we've seen an uptick. I think looking ahead, the road, for the U.S. economy could be a little bit bumpier, and we wouldn't be surprised to see more volatility in the market. It's likely that the Fed will raise rates again in December, another 25 basis points. So at the end of September, the Fed raised rates by 25 basis points. It's projected that they'll likely raise rates again in December, and then 3 more times in 2019, ending this accommodative monetary policy. As I previously mentioned, valuation equity markets were reaching all-time highs, new record levels throughout the month of September. And, we know that a correction is likely to happen. We're 10 years into this economic recovery. S&P 500 is up more than, through the end of September, the S&P 500 was up 320% since March of 2009. So we're pretty long in the tooth of this economic recovery, and we know that there'll be a correction. It's just important for you all to know that you have a broadly diversified portfolio. So you have exposure to both U.S. and non-U.S. Your fixed income portfolio is diversified to both U.S. and non-U.S. Bonds. And you have to remember, too, that this is a long-term strategic allocation. There will be some short-term declines, but over the long term, based on your current target allocation, we think that 7% return target is achievable. Looking at portfolio results through the end of September, you'll see the value of the portfolio was $744 million. You're slightly overweight equities, slightly underweight fixed income and real assets. Looking at total fund results as of September 30th, for the quarter, the portfolio was up 2.2%, year-to-date 3.6%. One thing I wanted to point out is the 5- and 10-year return is now almost equal, so both 8.04% and 8.02%. We've seen a significant jump in the 10-year return as some of those bad returns from 2008 have rolled off. So if you looked at the 10-year return just ending August 31st, so just by taking off September of 2008 and adding on September of 2018, we've seen almost a 70 basis point increase. So the 10-year return as of August 31st was 7.3%. Today it's at 8%. And if you looked at this as of year-end, so on 12/31/2017, the return was 6.2%. So it's amazing, just by taking off a couple of bad months and then adding on a couple, 9 months for 2018, which has been a very strong year, you see that 10-year return jumps substantially. Looking at the underlying composites, large cap equity is now up over 10% year-to-date. Small cap up 8%. Equity long short up just a little bit more than 1%. International developed markets, your international managers have done very well year-to-date. International markets have struggled. The dollar has appreciated, which has made it tougher for U.S. investors. And your international managers have done better than the overall market. You'll see up 2% versus the MSCI EFA down 1%. So outperforming not only on absolute return, but also adding value above and beyond that index. Emerging markets, it's been a tough year for emerging markets. As you might recall, 2017 was one of the best years for emerging markets, up 37%. Given some of that back, the strength of the dollar has been very difficult for emerging markets, as well as some of the talks about the tariffs. So emerging markets have been hit from both of those two, the tariffs and strength of the dollar. Fixed income, negative returns, year-to-date 1.4%, primarily due to rising rate environment that we're in, experiencing some short-term gains. But for long-term investors like you all, it's better to be investing at a higher rate over a long-term period. So we'll experience some short-term losses for longer-term gains in the future. The real assets portfolio has done very well year-to-date, up 3.1%. The Gresham TAP Fund has done very well. Energy is up 20% year-to-date. They're overweight energy, underweight agriculture, which hasn't done as well. So we finally starting to see some positive returns within the commodities portfolio, and then the real estate portfolio has also done well. Any questions on the returns for any of the underlying managers? No major concerns. One thing I did want to mention is that this summer we recently negotiated a new fee structure for your State Street, S&P 500 index fund, as well as the passive aggregate fund. Every other year, we will do a fee review, and we'll reach out to our clients, investment managers, and ask them to confirm that you're receiving the best fee for clients of other similar size. And during the process this year, we started to see fees for index funds kind of across the board starting to come down. And so we took that as an opportunity to talk to State Street on behalf of you all and all of our clients to negotiate the fees. And so they have a new fee structure that they have proposed that we work with them on, making sure that it's competitive to other index providers. Previously, the fee for the S&P 500 index fund was 4.5 basis points on the market value of the assets, and they've agreed to reduce that to 3 basis points on the first $50 million and 2 basis points thereafter. Based on the August 31st market value, this will result in a savings of about $17,000 per year. So we're very happy to report that. On the bond fund, it's not quite as good, but still a fee reduction. You guys are currently paying 4.5 basis points on that. They've agreed to reduce that to 4 basis points on the first $50 million, so it's a 0.5 basis point, and then 3 basis points thereafter. The fee savings on that is about $1,000 per year. So total fee savings of $18,000 per year for State Street. But in addition to that, and you may or may not remember, we negotiated a new fee structure with Times Square earlier this year, which resulted in a fee savings for that manager of about $43,000 per year. And then with the changes that you all made to the K2 equity long short investment, going from the overseas fund to the platform, there were significant savings there. And so all in, by the two fee negotiations and by making that change on the K2 investment, saving almost $500,000 per year. So it's like $485,000 per year. So huge fee savings for you all, and that's on an annual basis. It's not a one-time. It's reoccurring every year. So happy to report the State Street fee savings. There is an amendment that will have to be signed to make that fee change effective. Of course, we would recommend that you all accept that. I think it'll be on the agenda for the next month. Those fee amendments just came out, and I'm very happy to report that to you all.
And they are making retroactive to July.
That's correct. That's correct. It's going back to, the effective date is July 1st, 2018. Yep.
Any other questions for Patty? Thank you.
Thank you.
Item number 14 is comments from board, staff, and citizens. Mr. Williams?
Follow up on what Asset said about the State Street. It's my opinion that Paul can be authorized to sign that. It's not a material change in the contract. It's more administrative. So my suggestion is he go ahead and sign that document to get the lower fees in place. And then we received notice this week, too, that there's a class action settlement against Deutsche Bank, and we'll be bringing that back to you at the November meeting for approval. I've just gotten it preliminarily. It's around the $26,000 settlement. $23,000 settlement on our behalf. I want to check with the state because they're one of the parties that helped bring the lawsuit to see what their position is on it. And I'll have a formal recommendation. But right now it looks like it's a good settlement.